So I just found a cool article that I want to talk about. This article is about if you invested $1,000 in the Microsoft company back in during the dot-com bubble, during the dot-com crash. And funny thing is, I recently purchased some shares in Microsoft myself. Now, I'm a value investor, so I don't necessarily like tech-focused companies that are more focused on growth, but there are some exceptions, and Microsoft is one of those exceptions. Microsoft, Apple, those are two companies that come to mind when I think about stocks that can fit both for a growth investor and for an income investor. So, pretty interesting. A little bit about Microsoft. Microsoft has its hands in so many different technology. So, most people are familiar with the Microsoft Office products or with the Windows, but Microsoft also owns GitHub, Slack, LinkedIn, Skype, Xbox. So there's so many and even more. There's so Microsoft has its hands in so many different technology, and the first CEO was Bill Gates, but the CEO now, I think I'm gonna butcher his name, Satya Nadella. He's doing a really great job of just keeping everything in order with so many different things going on within the company. So let's jump into that article. So this article is from a company called Benzinga. So let's get into this article. Here's how much investing $1,000 in Microsoft at dot-com bubble peak would be worth today. Written by Wayne Dugan. Despite an ongoing pandemic and the US economy barely limping along, the Nasdaq is trading at all-time highs and is now more than 68% above its March lows. The surge in tech stocks in 2020 has understandably led investors to draw comparisons to the dot-com bubble in 2000. I did not look as the market dip we had in March and compare it to the stock market bubble. If you guys did, let me know about it. The Nasdaq ultimately peaked at $5,048.62 on March 10, 2000. Of course, some dot-com bubble stocks have performed much better than others in the 20 years since the bubble burst. One of those companies that comes to mind is Amazon. So I was not investing during the stock market bubble. This was before my time, but I do know that during the stock market bubble, and the crash, of course, there were a lot of investors that were investing in companies, websites, and these websites never generated any type of income. These websites were being evaluated based on their hits, their impressions, their clicks, which is not what you want to do when you look at a company. You want to look at how much a company is making, such as their revenue, their net income, how much debt do they have, what's their return on equity, does this company have a specific hold in the market, and other different things that you can obviously pay attention to. So first iconic founder Bill Gates stepped down from the CEO position on January 13, 2000 to become chief software architect for the company. Second, Microsoft was declared an abuse of monopoly in court ruling in United States versus Microsoft Corporation on April 2000. I think that pretty much has to do with Windows. At the time, investors feared the Department of Justice would break up the company, but Microsoft ultimately reached a settlement with the DOJ in 2004. I did not know about that. But like I said, I was not, that's 2004 which was when I was just starting to get into investing. The remainder of the past 20 years was defined mostly by Microsoft's shift to cloud services and its expansion in the gaming business. Of course, the Xbox. I owned the first Xbox, but I'm more of a PlayStation person. I've always been more of a PlayStation person. I've owned PlayStation 1 all the way through 4. Always been a PlayStation guy. Defined mostly by the shift to cloud services. The company also acquired the professional social network LinkedIn in 2017. And of course, they this article does not touch on the new CEO, Satya Nadella, but I don't know exactly when he got into his position. Of course, let me see. Bill Gates, he stepped down in 2000. So in 2000, dot-com bubble fallout. Microsoft's high watermark of the dot-com bubble was 119 and 94 cents back in 1999 following a 2-for-1 stock split when the bubble burst. Microsoft traded all the way back down to $40.25 in late 2000s. Wow. Following another 2-for-1 stock split in 2003, Microsoft shares peaked at $37.50 prior to the 2008 financial crash, but dropped as low as $14.87 during the crisis sell off. Now, the interesting thing with the market swings for particularly Microsoft, even though Microsoft saw a lot of highs and a lot of lows, they started paying a dividend in, if I'm correct, in 2003. And then they started paying a consistent dividend that they were able to increase by about 10% each year, starting in 2004, which is something that we will take a look at. Ultimately, it took Microsoft more than 14 years to regain all the value it lost following the bursting of the dot-com bubble. But the stock made it back to new split adjusted all-time highs by mid 2014. From that point forward, there was no looking back. Microsoft hit $100 once again by mid 2018 and 200 in June of this year, which just goes to show how, and I'm not a fanboy for Satai, but that just goes to show how well he's been able to run the company. So definitely big ups to him. Microsoft investors who bought at the dot-com bubble peak had to wait nearly a decade and a half to turn a profit on their initial investments. But those held on to this day have done just fine. In fact, $1,000 invested in Microsoft stock at the dot-com bubble peak would be worth $6,771 today, assuming reinvested dividends. And then I think that's probably the end of the article. Yes, looks like that's the end. So, cool article. One thing that is missing from the article to me is the dividend income part. So, at the end, the author did talk about what your $1,000 is worth now with all your dividend income reinvested. But what I want to know about is what's your dividend income? Because, like I said, Microsoft started paying a dividend, a continuous and upgoing dividend in 2004, and they've been able to increase their dividend by about 10% each year. So if you took that dividend income that you got from your $1,000 investment, what would that dividend income look like if you reinvested into buying more shares or fractional shares of Microsoft? And then also with the 10% growth in that dividend that Microsoft pays out, I really want to know what that dividend income would look like. Even though that's not in the article, still really good article. Short and sweet, was about maybe like 3 minutes to read. But like I said, Microsoft is I'm a value investor, so I don't necessarily like those specific tech stocks because tech stocks usually focus on growth. I like to focus on income, but there are always exceptions. Like I said, Apple and Microsoft are two of those exceptions. Let's look at the dividend income portion when I jump online on my MacBook, and we'll take a look at the dividend for Microsoft that they started paying in 2003, 2004. So I went to Yahoo Finance and I typed in the ticker symbol for Microsoft, which is MSFT. And if you look at the chart, you can see that, and let's definitely look at the during the dot-com crash. You can see that Microsoft was trading at its highest at 58.71 at the highest of the dot-com bubble, and then when the market crashed, it crashed all the way down to 21.68, which is pretty interesting because Microsoft has never been able to reach that 58.71 ever since. Right now it's trading at about 44.61. Now, here's the interesting thing. Microsoft went through a couple of stock splits, but they started paying out their first dividend in 2003. And then they started paying a consistent dividend in 2004. And they've been able to grow their dividend by about around 10% each year. So if I switch over to a different website, Guru Focus, we can see that, let's scroll down. So this particular chart, dividend per share history, let me take out the earnings per share. You can see that Microsoft has been able to grow their dividend nicely every single year since 2003. And they've been able to grow it by, like I said, the dividend growth rate, about 10%. If you look at the 10-year history, it's about 14%, but on average, 1 to 5 years has been about 10%. So they've been able to grow their dividend about 10% each year. So this is a cool website that I also look at. Now, this is not a deep analysis of a company. It's just a quick look at the dividend history of Microsoft, which the article did not touch on. So definitely Guru Focus is a website that I will talk about a lot more in the future. And some of the things that I definitely pay attention to because I'm a value investor. I invest for income, for dividends. So definitely one thing that I pay attention to when I look at a company is their dividend per share history, and then also definitely their payout ratio. But like I said, these are topics that we will discuss on another day. So yes, let me know what you thought about the article. Put it in the comment section, and I'll talk to you guys in the next one.